Let's start this deep dive with an incredible, an almost unbelievable paradox. It's one that should make every business leader, every founder, every investor just sort of sit up and pay attention.
Yeah.
We are talking about Lululemon. Its CEO, Calvin Mcdonald, was recently let go. And this was despite him presiding over one of the most successful operational periods in the company's entire history.
Mm-hmm.
Over 7 years, he tripled the revenue, tripled it, turned it into an $11 billion global athleisure empire. I mean, that's the kind of record that usually gets you a golden statue, not shown the door.
What's truly fascinating here is the absolute clash of metrics. It's just a complete contradiction. If you judge McDonald purely by the conventional business scorecard, he was a massive success. Revenue growth was spectacular. Geographic expansion was, unprecedented. He pushed Lululemon into 30 new international markets. Right. And they saw international revenue jump 33% in their third quarter alone.
Yeah.
Yet when you look at how the market reacted, well, the stock told a story of devastating failure. Lululemon's market cap just collapsed. It went from $60 billion down to $25 billion over 2 years.
Wow.
That's a 58% destruction of shareholder value. So this wasn't a failure of, quarterly execution. The analysis suggests it was something much deeper, a core constitutional flaw in the brand's identity.
Okay, let's unpack this.
Yeah.
Because the core question for you to consider is, when you fire a CEO who successfully tripled your revenue, what were they really being fired for? We are diving deep into an analysis, and this was written by Mark Aberkal, a luxury executive based in Paris.
Mm-hmm.
And it argues that McDonald succeeded, but is the wrong kind of head of state. This analysis frames the issue as the abandonment of what was once a deeply rooted movement nation in favor of a sterile, optimized retail state. So the mission of this deep dive is to answer this. Can operational efficiency and relentless scale actually kill a brand's soul? When you look purely at the deliverables, I mean, McDonald gave Wall Street exactly what it demanded. He pushed past that $11 billion revenue target. He established a global scale. And maybe most importantly, he built a seamless omni-channel infrastructure. The source describes this as building the roads.
The roads, right?
That allow customers to shop however, whenever, and wherever they want, completely without friction.
And that's exactly where the critique lands. Infrastructure without mythology is it's just expensive asphalt. The analysis calls McDonald the prince of infrastructure, a leader brilliant at building the operational roads, but critically blind to where those roads should actually lead, or, more specifically, the belief system that should populate them. The critique is incredibly strong. It says under his tenure, Lululemon was strip-mined for efficiency and hollowed out for scale.
What does strip-mine for efficiency even look like on the sales floor? Can you give us a concrete example of that hollowing out?
Absolutely. The original core identity was tribal. It was about belonging to a specific community built around this whole movement philosophy. Hollowing it out means that identity became generic. It became optimized for volume, for repetition. You start trading out that local, specific community feel of a store, where the ambassador is your neighbor, the local running coach,
right,
for a generic, high-volume retail template that just ensures predictable sales per square foot in Vancouver, Shanghai, and London. The analysis argues that the cost of tripling the revenue was that, and I'm quoting here, desire died. The product became an excellent piece of clothing, sure, but it stopped being a sacred object.
And we saw the dissent against this change just break out into the open, right? It confirmed this wasn't just some internal feeling. Chip Wilson, the founder, he took out that full-page Wall Street Journal ad.
I remember that.
Titled, Lululemon in a Nosedive, and publicly criticized management for what he called a lack of innovation and losing its cultural edge.
And that public intervention by the founder, it raises this really important constitutional question that I think every modern board should be asking itself, especially for these high-growth cultural brands.
Which is?
Who does the board ultimately serve? Does it serve the financial citizens, the shareholders, whose primary interest is just optimizing metrics, predictable growth, scalable infrastructure? Or does it serve the Lululemon citizens, the loyal customers who actually sweat in the clothes, who treat the brand as an extension of their own identity?
The true believers.
The true believers, who view the philosophy as something closer to a religion. McDonald's leadership chose the former. They built the administrative state for Wall Street, and the market, ironically, eventually punished them for sacrificing the soul in the process.
To really understand what was sacrificed in this relentless pursuit of scale and efficiency, we have to look back. We have to look at the original Lululemon, the one that existed between, let's say, 2000 and 2015. That period, the analysis shows, exhibited all the markers of a cultural nation.
And it's vital to remember that Lululemon wasn't founded to sell high-end leggings. It was founded to sell a belief system, and the product was just the uniform for that belief. This shows up immediately in their use of what the source calls sacred language. The sweat life philosophy wasn't just marketing copy, it was an ideology.
But wait, wasn't some of that stuff kind of quirky? I remember the famous manifesto bags. Was that really nation building, or was it just clever, slightly new age marketing?
Well, the argument is that it was nation building because it established a shared language and shared values. Those manifesto bags, they carried scripture like, do one thing a day that scares you. And crucially, in the stores, they had those walls where customers weren't asked about their credit limit, they were asked to post handwritten goals.
Right, the goal walls.
Exactly. Not sales targets, but life intentions like run my first marathon or practice gratitude. That shifted the entire transaction from what are you buying to what are you becoming. It made the retail space a sacred place of intent.
That brings us to their tribal institutions, which were based on physical gathering. In today's hyper-efficient e-commerce age, that sounds incredibly, well, inefficient.
It was deliberately inefficient, and that was the entire point. The first store in Vancouver, back in November 2000, was specifically designed as a community hub first, and only a retail space second. I mean, think about that. The transaction was secondary to the gathering.
So you'd go there to, what, do yoga?
Yes, or meet your run club. The store ambassadors weren't celebrity endorsers. They were local, trusted figures. The yoga teacher everyone knew. You came to move, to gather, to belong, and then you bought the uniform. That deep-rooted local presence is what makes a nation feel real.
And finally, those sacred objects. The products themselves went beyond just being functional.
Exactly. The logo was effectively a passport stamp, signaling membership to the initiated. The pants were the uniform of belonging. And even their technical innovation was treated as craft and sovereignty rather than just market opportunity. Take the lab concept stores in New York and Vancouver. They treated product as equipment designed for ritual, not seasonal fashion.
Oh, right.
Remember the 2016 double printing reflective process? It was engineered specifically for the NYC marathon gear. That's treating performance tech as a national asset.
Okay, here's the punchline. This really shows the sheer scale of the trade-off. Today, Lululemon operates 767 stores across 23 markets. But walk into any of them, Vancouver, Shanghai, or São Paulo, and what do you see? Clean white walls, neat product grids, generic architecture, all optimized for administrative efficiency and sales per square foot.
And the contradiction is most visible in the sales data. While they boast this phenomenal international growth at 33% surge, the Americas, their foundational home market, is showing weakness.
Weakness how?
Comparable sales fell 5%. The global idea of Lululemon travels extremely well. But because the soul has been sacrificed for the state, it has no sacred center. It's infrastructure without a home base, which ultimately makes it vulnerable.
So if that's what was lost, how do we see McDonald's pattern of prioritizing systems over soul established before he even got to Lululemon?
We see the exact blueprint laid down during his time at Sephora Americas between 2013 and 2018. He successfully built what the analysis calls the beauty superhighway. That meant seamless omni-channel integration, the tiered Beauty Insider loyalty infrastructure, and massive geographic expansion.
The roads were immaculate. The traffic flowed.
Precisely. The infrastructure is brilliant. But here's the critical insight. Sephora only truly became the mecca of beauty, a pilgrimage site and cultural incubator for brands like Fenty Beauty after McDonald left. It was under different leadership. He built the flawless administrative state, providing the logistics. Someone else had to come in and create the Sephora mythology, turning that superhighway into a pilgrimage route.
And he brought that exact philosophy to Lululemon. His core strategy, power of 3x2, double men's, double digital, quadruple international, was just pure multiplication. That is the definition of portfolio optimization and conglomerate thinking. It's all about horizontal growth, not nation building.
It's the strategy of a holding company, not the strategy of a movement. And the greatest, most expensive symbol of this failure to prioritize mythology over utility is the $500 million acquisition of Mirror in 2020.
Which they shut down.
Which they quietly shuttered by 2023. Mirror was arguably the single most important piece of sovereign infrastructure they could have acquired, a screen in the customer's most private space, their home.
So it was the perfect medium to deliver the movement's mythology.
Absolutely. But McDonald treated it as a functional utility, just another screen for generic workout classes. He put it into direct, unnecessary competition with Peloton and Apple Fitness. The analysis argues that instead of a utility, it should have been treated like a theater, what they call Lululemon cinema streaming mythology.
So not workout classes,
No,
but
yeah. Athlete documentaries, deep dives on movement philosophy, community stories. It became failed, discounted hardware because it lacked a sovereign story.
and this conglomerate thinking, this pattern of horizontal expansion, chasing adjacent market segments, you see it repeated across his tenure. The failed 2019 beauty and self-care launch, the struggling 2022 footwear launch, the failed resale platform in 2021. He was trying to treat Lululemon like a diversified holding company, just throwing spaghetti at the wall to see what stuck. The source suggests the company needs to stop chasing market segments and go vertical in sovereignty, deeper into the science of feel and movement, rather than just wider in categories.
That's the critical shift. If we accept that the Constitution was flawed, then the job for the next CEO isn't fixing merchandising or tweaking conversion rates. It's completing the construction of the cultural nation. The analysis outlines 5 pillars for this, treating Lululemon more like the Louis Vuitton of fitness, a cultural power, than just a retailer.
Okay, pillar 1. Declare the capital. This means Lululemon needs movement embassies, not just bigger stores. Vancouver, the birthplace, must be the capital, a site of ritual. But wait, how does having one singular capital help a global $11 billion brand? Doesn't that go against the whole idea of scale?
That's the tension you have to accept. You sacrifice some scale for ritual. The capital isn't there to generate predictable revenue. It's there to generate mythology that can then be replicated globally. Imagine the Vancouver Capitol. The ground floor displays core products like museum artifacts. The third floor holds transparent R&D labs where material scientists work openly.
In front of people.
Exactly. And the rooftop is the town square for community meals and run clubs. That single physical location validates the global promise. It provides a sacred center, and it contrasts sharply with those 767 cookie-cutter stores.
I see. It's about authenticating the global brand through a physical, non-replicable anchor. Let's move to pillar 2, the loyalty program. Grant citizenship. This is fascinating. Loyalty must be earned, not just purchased instantly.
Exactly. The source suggests a sweat equity vesting program with 3 tiers. This prevents the rich tourist, from buying status instantly. You start as a resident. After 2 years and verified participation in community events, you can petition to become a citizen.
Okay.
After 5 more years of leadership and involvement, you can become an ambassador.
But practically speaking, this sounds like an administrative nightmare. How do you verify community participation without making the program cumbersome, maybe even elitist, and hostile to casual shoppers who spend a lot of money?
It is complex, but that complexity is the barrier to entry that ensures value. If status is hard to earn, it becomes more valuable. The complexity is the defense mechanism against the easy optimization that ruined the culture in the first place. You are trading administrative simplicity for cultural sovereignty. It forces the company to invest in local managers who know and can verify their community, shifting the focus back to those local tribal institutions.
That's a serious reprioritization. Moving on. Pillar 3 is about content and communication. Create state media. Kill the failed mirror hardware. Build Lulu Cinema.
This is a streaming platform embedded right in the app, dedicated solely to mythology, not utility. Think less workout classes, more F1 TV strategy. F1 TV doesn't just show the race. It owns the content, the venue, the whole narrative.
Right.
Lulu Cinema should stream annual documentaries on the world's most dedicated ultramarathoners, quarterly deep dives into material science, and live streams of events from the Vancouver Embassy. It takes control of the movement's narrative.
Pillar 4 is deeply technical. Codify the disciplines. This moves Lululemon away from seasonal fashion and toward being, I guess, a specialized biotech company for the spirit. It's all about engineering what the Force calls the science of feel.
Yes, and that is a critical concept here. It's the body's innate sense of its own position, motion, and balance. In simple terms, it's how your body feels itself move. The analysis argues that Lululemon's core competency is engineering that very feeling.
So you're suggesting the fabric isn't just wicking sweat, it's actually changing how you perceive and feel your own movement. How would that codification look on the shelf?
It organizes the product line around 3 distinct technical disciplines, each with a specific goal and a non-negotiable hero fabric. First, the discipline of alignment for yoga. The goal here is 0 distraction. The hero product is the Align Pant, built from Nulu fabric. It feels weightless, which maximizes focus.
Then you have the discipline of velocity for runners.
Correct. The goal there is aerodynamic sensation. The hero product is the fast and free type, built from Nulux fabric. This fabric is designed to feel sleek and reduce friction. enhancing the sensation of speed.
And finally, the discipline of resistance for training and weights.
The goal is structural integrity. Hero product is the Wonder Train Tight, made from Everlux fabric. This is designed for maximum support and shape retention during high-intensity stress. This segmentation puts science, not fashion trends, at the core of the offering.
And critically, Pillar 4 requires governance. The source suggests creating a product council with absolute veto power over any design decision that compromises technical performance for aesthetics or, some seasonal trend.
Yeah.
This council would have material scientists, pro athletes, citizen reps.
And it ensures that design teams report to science. It protects the technical integrity that defines Lululemon's sovereignty. It's the ultimate check against the retail state. It ensures that the cultural nation's technical laws, the laws of the science of feel, are non-negotiable.
Finally, Pillar 5, defining the next leader, the cultural architect.
The next CEO cannot be a digital native, focused primarily on algorithms and e-commerce conversion rates. They need to be an athlete architect, someone who physically practices movement as identity, who understands material science, and who possesses the courage to sacrifice short-term Wall Street approval when it conflicts with cultural sovereignty. They have to treat Lululemon as a nation to be governed, not just a retail chain to be optimized.
So what does this entire analysis mean for you, whether you're a consumer or someone running a business? Lululemon's stock collapse wasn't a failure to hit targets. It was the market eventually pricing in cultural bankruptcy. McDonald proved you can successfully convert a cultural nation into a massive retail state. You can triple the revenue and expand globally. But the lack of soul, the lost mythology, eventually leaves the entire structure hollow.
And you lose billions in value. If we connect this to the bigger picture, the lesson is universal for any brand, any community, any company that relies on emotional connection. Infrastructure, the processes, the scale, the distribution is absolutely necessary. But without that sacred center, the mythology that drives passionate emotional connection, the entire structure is fundamentally hollow. It's temporary. At the end of the day, the ultimate CEO isn't the finance wizard or the optimization guru, but the cultural architect who puts the nation, the belief system, first.
The infrastructure is paved. The roads are there. But the final challenge, as this analysis shows, is giving those roads somewhere sacred to lead. So think about the brands you are fiercely loyal to in your own life. Where is their capital city, and what price are they paying, or will they pay, if they prioritize administrative expansion over that deep personal feeling of belonging? That's something for you to mull over as you move through your week.